Imagine waking up every month and seeing an extra $100 hit your brokerage account just because you own Walmart stock. No extra work. No side hustle. Just dividend income. But here's the real question. How much Walmart stock would you actually need to own to make that happen? The answer is probably a lot more than most people expect. Let's find out. If your goal is to earn $100 every single month, you're really trying to generate $1,200 per year in dividend income. Now, Walmart isn't known for having a huge dividend yield. It's known for something else: consistency. The company has been paying dividends for decades, and it's one of those businesses people tend to hold for years because of its size, stability, and steady growth. But that reliability comes with a trade-off. The dividend yield is relatively low. Let's use a dividend yield of about 0.85%, which is close to where Walmart has been recently. Here's the math. Take your annual goal of $1,200 and divide it by 0.0085. That comes out to roughly $141,000. Yep. To earn about $100 a month from Walmart dividends alone, you'd need somewhere around $140,000 to $150,000 invested, depending on the current dividend and stock price. If that number made your jaw drop, you're not alone. Most people assume they only need $20,000 or $30,000 invested. But when you're buying a company that focuses more on growth than a high dividend payout, the income is naturally going to be smaller. Let's make those numbers easier to picture. If you invested $10,000, you'd earn roughly $7 per month. Not exactly life-changing. At $25,000, you're looking at around $18 per month. With $50,000, you're earning roughly $35 every month. Even a $100,000 investment only gets you to around $70 per month. So where's the upside? Why do so many investors still buy Walmart? Because dividend investing isn't always about today's income. It's about where that income could be 10, 15, or even 20 years from now. Think about it. Every year you add more money. Every dividend payment buys more shares if you reinvest it. And if Walmart continues increasing its dividend over time, those payments get bigger without you doing anything. That's the power of compounding. Your money starts earning money. Then that money starts earning money. And over enough years, the snowball gets surprisingly large. Another reason investors like Walmart is that it's one of those companies that's woven into everyday life. People still buy groceries during recessions. They still need cleaning supplies, medicine, pet food, and household essentials. That doesn't mean Walmart stock can't fall. It absolutely can, but many investors appreciate owning businesses that sell products people need regardless of what's happening in the economy. Now here's something interesting. If your only goal is maximizing dividend income, Walmart probably isn't the stock you'd buy. There are plenty of companies that offer dividend yields of 3%, 4%, or even higher. The catch? Higher yields often come with higher risk. Sometimes those dividends get cut. Sometimes the stock price falls enough that the higher yield doesn't make up for the loss. That's why many investors prefer balancing reliable companies like Walmart with other dividend-paying stocks instead of chasing the biggest yield they can find. Personally, I think Walmart fits better into a long-term wealth-building strategy than an income strategy. You're getting a globally recognized company, a history of paying dividends, and a business that's constantly adapting with online shopping, grocery delivery, automation, and membership services. It's not flashy. It's not exciting. But sometimes boring investments end up being some of the best long-term performers. So here's the takeaway. If your goal is to earn $100 every month from Walmart dividends alone, you'll likely need around $140,000 to $150,000 invested based.